All right, everyone, we are back. It is Halloween and it is our Fractional Friday. I got my man Joseph Cacciapaglia back, and we got a special guest today, Joshua from M1 Home. So, morning, fellas.
Good morning.
Morning, how you doing?
Good, good. So, I guess I didn't get the message of just sitting back on our couch or sofa today and then just chilling. But, Joshua, thanks for joining us. Maybe quickly introduce yourself. What do you invest in, and maybe where you're at?
Okay. Yeah, my name's Josh Dariano. I am from Ohio. Um, my investments are so wide ranging, but the investments that are not real estate, I don't control. I mean, I control, but I don't work in the businesses like coffee and farms and massage and these kind of things. But the the one thing that I do work in is real estate as far as the businesses. Yeah.
Nice. And then, so Joseph, we kind of do this fractional real estate thing. And we have a lot of, it's a new market, it's a new thing people are dabbling into. And Joseph was mentioning that it seems like that's something you're looking into. Is that kind of the space you're interested in?
Yeah, I'm in it. I'm in Lofty right now. I think between my three portfolios, we have like my wife and I and the business account over $1 million in Lofty itself. But I haven't really dabbled in the other fractional sites. Not so much because they're not liquid. Like you can't really offload the shares or tokens, I guess. So yeah.
Want to say
Uh,
good morning real quick to Flavio from Grandview, Washington, Yasik from New Jersey, and hey, we got Cody Davis here, recently married. I'll put Cody's YouTube channel also in the chat. He was one of the youngest guests, I believe, on Bigger Pockets many years ago. But Josh, my first question before Joseph jumps in is, I heard the amount that you said you had in Lofty. Maybe over what timeline? Like, when did you get started in Lofty? I guess was it you just kind of dumped it all in right away, or you kind of got your feet wet in that space first?
yeah, a year ago, about a year ago. Yeah, yeah. I mean, I was doing my own fund before Lofty, and probably 6 months in, I dumped 5 houses into Lofty. Joseph has covered them uh, from the fund, and yeah, but before that, I would dabble like in Fundrise and various different REITs like OOO and things like that. But it wasn't like ownership. And even when I was talking in Discord yesterday about the European market, because I bounced back and forth from Europe to Ohio, there's nothing equivalent to Lofty as far as actual ownership. So, well, what we believe is actual ownership according to the operating agreement.
All right,
So
before Joseph jumps in, I just want to remind everyone, Joseph was just on Michael Zuber's channel talking about fractional real estate. So it is a space that a lot people are getting interested in. And like Joseph mentioned, if you look it up on YouTube, it is going to probably be his only channel, like the number one channel there on fractional real estate. So go check out Joseph's channel, who's putting out daily content. But Joseph, what did you have for Joshua?
Yeah, so Josh, yeah, one, I appreciate you jumping on here. You're probably, of all the guests we've had on Fractional Friday so far, the one I've interacted with the least prior to
yeah,
having you on here. Um, one of from my perspective of you, look, it looks like you're someone who's been really successful in the real estate space. I did read your book, so that he's got a book about what he calls swing trading real estate. Is it swing or be swung? Is that what it's called?
yeah, yeah.
So he thinks about real estate very much like you do, very much the same way I do. One of the things, so we had Earl on and we had Alec on in the past, and both of them were really early in their real estate careers and needed access to capital, right? So Lofty, I understand the appeal for them. someone like you who already has been raising capital from third parties, who is clearly doing well in your in your real estate fund that that you're running, what got you interested in Lofty?
That's a good question, because now I reconsider my decisions based on what has been going on.
Right.
I mean, I really like it, but it's at the moment, Lofty is not liquid as far as for me. Like,
Right. No, I 100% agree.
and the whole reason why I got into Lofty was for liquidity. But now, like, just brownfield for an example, I dumped $20,000 into that. It went down to $10 a token. I bought it for 49, and like, unless you like losing money, it's not liquid. So
Right.
I don't know. I thought about that. Like, why did I go into Lofty? Or why did I onload the properties into Lofty when I could have just leveraged them and kept the ball rolling outside of Lofty, and it probably would be faster. I don't know. I mean, I still have properties outside of Lofty, so
Right.
it was just a trial, kind of the 5 houses, and I probably, to be honest with you, won't onboard any more, just from that experience. But I was thinking maybe in Europe, because it's a little bit different, but it would be completely different structure. I would raise to buy, like a traditional fund, I guess.
Right.
Yeah.
Yeah, that's what it's. So it's really hard for me. I've had a difficult time understanding, like, what is from us. If so, okay, and I don't want to ignore this. There's a lot of grifting and accusations of grifting on the platform,
Yeah.
right? In general, even so, Marc, you might not know this, but Alec, who we had on just a couple of weeks ago, now there's some people accusing him of misappropriating funds from several of the DAOs. Whether or not exactly what turns out there. I mean, this is real new, but he manages almost a third of the platform. So there's a whole lot of opportunity for that type of stuff to go on, and I understand the appeal of someone that's their goal of the platform. But like someone like I've thought about bringing properties to the platform, and I just could not get my head around. Like, I think what you're talking about, where you're using it as acquisition capital, it can make some sense because you can really be well aligned with the investors that on there. But it's really hard to understand the appeal otherwise, right? And I guess if it worked the way it's supposed to in theory, where you could go put your properties on there, and then whenever you needed to sell out at face value, to get cash or buy it back when it's dipping, I guess I can see the appeal if it worked the way it's supposed to. But yeah, I mean, it sounds like I had no idea how bullish you were on them. When I asked you to come on here.
Yeah.
It is so. Have you had so? And you also manage how many properties are you managing on there?
On Lofty,
Yes.
I think it was 25.
How's that?
I don't really remember, because on the portal it's by tenant and not by or by unit, I guess. And there's a few triplexes and duplexes. So
Oh yeah.
I think it's 25 though.
And so you manage properties on there, and you manage them in real life for your fund.
Yeah.
How are those? How is it interacting with Lofty investors? Like, is that? I'm just curious how those two compare.
It's a pain in the ass,
Yeah.
to be honest with you. Really.
Yeah.
Because it's every day somebody asking me, hey, where's this? Hey, where's that? It's in Dropbox. It's over here. Why haven't you updated this? Because there's nothing going on.
Right.
Like, when you run a fund, you have full range. You don't have to put out votes. You can just like, if you get 3 bids for a job, you don't have to put it out to a vote. It's obvious you take the lowest bid. But also you have like your own team of subcontractors working for you. It's a lot different. But yeah, it's just a bigger hurdle to be a manager on Lofty.
Are you thinking, so, there's some discussion about Alec giving up some that he's managing. Are you thinking about taking over more, or is it not worth your time to do that?
People have asked me.
Right.
I don't want to take anything outside of like my zone, I guess,
Yeah.
region. And there's
Smart.
only two that would be suitable. I mean, Akron would work, but I don't want to take Akron because it's ghetto. Also, there was one in Toledo that is like underwater. The tenant's not paying. I don't want to walk right into an eviction. Yeah, so maybe two, maybe, but I'm not putting out the vote myself.
Yeah. No, I mean, I think it's smart, and it's probably why you're having a different experience also too, right? You stuck with the region you already know. You have there's someone else in Discord, right? Nathan works for you.
Yeah,
He
I
did
have a
want.
few people working for me, like that are also on Lofty, but not on Discord.
Oh, interesting. Okay, but
Yeah.
he wanted me to make sure that you said that he was his favorite on here, or he was your
Oh yeah,
favorite.
yeah. He's my
Oh,
favorite. Yeah.
okay, good. Just wanted to make
And
sure.
I guess he doesn't technically work for me. He takes 5%, so it's fair. Like
Oh,
he's
nice.
on the
Okay.
ground and I'm doing the background, like communication and the accounting and things like that.
So, I guess we can talk about this from a couple different perspectives, because you're really interacting with Lofty in every way that you can, right? You're an investor as a
Yeah.
third party. You've brought your own properties, and you're managing properties. Do you think, and I know obviously you mentioned, you've lost some money as on the investor side. It's a hassle to manage on there.
Yeah.
You're not getting the kind of liquidity that you'd like to when you list properties. In whichever one you feel like you'd want to talk about, what do you think would need to change on Lofty to make it actually be a platform that works for you?
So the first thing is the properties have to be appraised correctly. I know that in the past they had like Marcel Turnkey come from Detroit and dump a bunch of properties on Lofty, say they're worth 150,000 when he really bought them at a sheriff's auction for 10, and fix them up and maybe they're worth like 60,000. So that was the first huge mistake. But
Right.
it seems to be like kind of fixed. But at the same time, I think it's hard to say, because like when you have a fund, you have investors that have hundreds of thousands of dollars. Like it, the emotions aren't so much there. There's not so much moving around and having to sell or whatever. So when you're dealing with like people who put in one token and it's only $50 or even like $12 sometimes,
Right.
and they like something happens, they don't actually have like the means to be investing, or they shouldn't be investing. They should be paying for like their basic needs first, and then something in their personal life comes up, then they need the funds, they sell, and it's just like I don't know. I don't know if it's really fixable, that part, but yeah.
Interesting. Well, so if somehow they were able to make it so tokens traded closer to property's fair market value, so then you had that true liquidity.
Yeah.
I mean, they'd still lose money on fees, right? Like, there's certainly a problem of they've done a really good job of attracting investors to the platform who are just not. There's a lot of people that are, they're more. It's almost like they're gamblers, right? Like they're
Yeah.
YOLOing into stuff. They, like you said, maybe they're putting stuff into real estate that thinking that this is a very liquid investment, and then okay, at a bare minimum, you're losing, your 14% to fees or whatever it is if you buy and sell, even if it didn't go down in value. So
Yeah.
um,
It is like half degen community because it is blockchain based. And
yeah,
I think that is, it's good and bad. Like you can't hit the general public with the platform and they just sign up and then they have to use their bank account, but then there's a fee for that and then there's a fee for this, and then to cash out, it's a fee. And like if you know how to use Algorand, which is also like a learning curve.
Mm-hmm.
Even if you use Coinbase, like you have to know to send USDC through Algorand network, or else it's not going to arrive, or even send it back to Coinbase or whatever. So that's also a hurdle for some people, I think.
It was for me. I mean, I wasn't a crypto guy at all. I had a Coinbase account. I had like a little bit of investment in there, but I didn't even realize I could send it to my Lofty wallet from there initially. So most of the money I put onto the platform, I just used a credit card. Then because the first couple of ACHs I tried to do would take forever.
Yeah.
They have, I don't, it was, they just did an announcement yesterday that that's no longer a manual process for them, which is mind blowing to me. Like I was surprised that was a manual process on their end. So yeah, it's certainly a hurdle for people like me who are not crypto natives. But it's a very weird, it's been a lot of fun in Discord for me. I spend way too much time in there because it is a lot of people that think about the world almost exactly the opposite of the way I do, right? They're thinking about their returns over days, not, months or years. And really like what almost looks like just being completely risk blind to me, right? Like they're looking at that return and not trying to in any way factor in, okay, well, what's the risk relative to that return, right? So,
yeah.
I do see quite a bit of people. I just want to say good morning, tuning in from Joseph's channel right now. Dan Manietta, Liam, no, Limus it says Nathan is the best. I'm not sure if this is Almighty Jack says exactly Nathan is the best. So I'm not sure what's going on, but Investment Katie said, "What's up, friends?" So, and then there is Joshua's book, Amazon link to his book in the chat. So if anybody wants to check it out, and maybe Joshua quickly, well, what can they expect from that book? What's in it? What kind of information?
It's short. That's the whole point. So people will read it. So if you're thinking about it, that's a good reason to start it because it's really short and it's really to the point. I think they can expect real. I'm not like. I mean, I cuss in front of my kids and things like that, and it's raw, I guess. I would say.
Right. Well, if anyone wants to check it out, there is the Amazon link there, and go check it out. And
I read it in probably 2 sittings over the course of just 2 nights. I think this is one of the things why I knew, like, why I think we think about real estate very similarly. And so just to give you like a little bit of, unless you want to, and you can tell me if I'm wrong or what my takeaway was, but Josh is someone who is looking to make his money on the buy, which I think is where real estate, what makes the most sense. Not necessarily hold for too long. I think talking about a year hold so that you get into long-term capital gains. But then, churning that money quickly so that you can then go and turn and make your money on the buy again. That's obviously there's a lot more nuance than that. I think you talked about not really getting too tied up in the, where you're worried so much about taxes. Like somebody wants to, some people try to 1031 everything. Like a lot of the stuff that you said in there is the way I've done things in my personal life, and so different from, I think, what a lot of what you see. It's not buy and hold forever, but it's also not, you're also not flipping. So I don't know. I thought it was an interesting strategy, and it was funny because I've never really thought about it I've done the types of deals that you talked about a bunch of times, and it's just kind of funny to see somebody actually put that down and say, hey, this is how you do it. So
yeah, and I think it could be applied to a lot of properties on Lofty that are struggling,
right?
Like Brownfield. Like if you just put Brownfield at 100% occupancy, I know it would be hard, but you got to go there for like a month and stay and try, and then sell it as a business. I mean, it's never going to sell to a single, like as a single family home or something like that. It's going to be sold to investors.
Right.
So you have to think what they want, and having it everybody evicted and trying to sell it after that is not the right way.
Right. Yeah. I mean, yeah. I mean, that's the problem there is they don't have enough runway, right? Like they have ridiculous debt structure and, but then also too, yeah. I mean, so they're trying to get it sold when it's not even stabilized, right? So, that's one other thing that I've talked about a little bit, and I'm curious what your thoughts on lofty properties. It seems like there's opportunities to just buy from the DAOs,
Oh, yeah.
right?
Yeah.
Is that something that you've looked at all?
I do it every other day. I'm just looking for deals. And people like Jerry and Max are kind of worried about property managers doing insider trading, but it's just there. I mean, like I buy the properties that I know the same info as all the other, users of Lofty. Like the tenant didn't do anything different. There's nothing going on with the property, but the token is $20.
Right.
I don't know why, so I just scoop them up. And yeah, there's plenty of opportunities, especially now because I'm so like I'm probably down half of my initial amount like invested. So I mean, like that tells you
down
everything.
as in lost token value relative to what you invested,
Yeah,
not
but
taken off the platform.
yeah, like my sister and my brother, they're always like, "Oh, I'm up this much," and like my friends that I invited to Lofty, I'm up this much, I'm down this much, but I'm never looking at it. I'm only talking about it now because we're talking about it, but
Right.
the actual like value of the house, it doesn't matter. I don't look up my personal house ever because I don't have any plan to sell it. Like if we want to sell it on the open market, that's where we're going to get our money back, basically.
Right. And we're seeing that now. I mean, I think there's
Yeah.
30 properties listed for sale.
Yeah.
I don't know how Lofty survives if the best use case for a lot of the deals are buy those tokens and sell it in real life right now, though. I mean, that's tough. I don't know. Can you see the question Limas put in the chat?
Yeah. On the bottom of the screen.
Yep.
Yeah, so it says maybe this was already asked, but Josh still a big believer in fractional real estate overseen by DAOs as a worthwhile investment to pursue?
Yeah, I think so. I think there's opportunity in the, like we just said, the cheap token value. But as far as onloading properties, I won't be doing that anymore. I mean, maybe like I said, with the European market, like there's different, like the European market, they invest in debt and it's not really fractional real estate, it's fractional debt to fund like projects and development and things like that. But they have a thing like where you buy a house from a company, they manage it for you, say they give you 6% guaranteed, doesn't matter if the tenant's there or not, and they will buy it back from you anytime at your cost. And I think that would be perfect for Lofty because then the token value should, in theory, be stable.
Right.
In theory. But if it goes under that, I would be scooping them up because like you can liquidate it anytime at that price. So yeah.
And I didn't, I'm not sure if you mentioned it. And I know you guys kind of touched on it a little bit about the blockchain and whatnot, but I'm not sure. Are you into Bitcoin or crypto also as part of your investment portfolio?
Yeah, of course. Since 2015, I think. Yeah. Like this year, I went to the Bitcoin conference in Prague, and I was wearing the Lofty shirt, and I was like, really trying to onboard some people, and they're just a different group of people. Like I would say, you know, yeah, and you actually own the house, you know. Oh wow, okay. So do you have to do AML like KYC? Yeah, you do. Oh well, I'm not interested. Like, like not interested at all because these people are like anonymous. They show up in masks. Their kids are wearing masks, because if they get like, if they know this guy has 1,000 Bitcoin in his wallet, like if they, then they could kidnap their kid and, hold them. So it's a different world, but I guess there's two sides of crypto, blockchain technology and the use cases for it and the crypto OGs.
You are not wrong. It is very difficult to get any Bitcoin crypto people that would like to show their face on live streams with us. It has been challenging.
There's a lot of people in our Discord that I've talked to that want to come on here, and I'm like, I'm not doing it if we're not actually going to see who you are and talk to you.
Yeah. I think people were surprised when I first said, "Hey, my name's Josh," like M1, and I even showed them my face, like a picture of myself, and like, what? I don't understand what's there to hide. I didn't tell you what my wallet address is. Like, you can speculate. It could be 1 million Bitcoin. It could be one. Who knows?
Right.
It doesn't matter.
Well, and that's one thing about Lofty. It's really easy to start to figure out who has wallets on Lofty.
Yeah.
And then that kind of gives up, okay, now I can see where you're sending that Lofty money to as well, right? Like if people are starting to, depending on how they offload their cash from there or onload it. So I thought, to me, I like the blockchain in that it is so transparent and I can see, like, I like that I can see what Alec is doing as far as buys right now, right? Like, okay, I can see, he bought some properties this morning. He's not completely checked out of the platform, right? Like that, like I said, it's still yet to be seen what happens with that situation, but being able to see what people are doing, or, if I own one of your co-ownerships and I see you, and I haven't seen this with yours, but we've seen this with others, where they're all of a sudden dumping giant blocks of their ownership at $25 when they just recently onboarded the platform. Well, I get nervous about that, right? Like, do they, what's happening there? A lot of times the answer is they need capital for something else, but it's nice to be able to see that. And so it's very strange to me how those two things seem opposite, right? Like, one, I can see everything going on, but also these people want to be anonymous. And I guess you just don't want to be attached. Maybe I get it because you don't want to be attached to that wallet, like, because then people can see everything that you have going on. So
yeah, in Para Wallet, especially with the Algorand network, it tells you which wallet funded that wallet. It's like next level. Even if you have like a secret wallet, it's hard to hide.
yeah.
So all fired up. So Bill, thanks for tuning in. He does say, "Call me paranoid, but this feels kind of unsafe, borderline shady. I don't see any accountability if some bad apples mess things up." You guys got any thoughts on that, Joseph?
I'm not sure what he's referring to.
I think, in general, a lot of the platforms where you buy fractional real estate aren't safe, right? That's why I didn't go and put some huge portion of my net worth on there. All of them, I took a certain amount of money a year ago and said, this is what I'm going to experiment with across several platforms. Some of those have gone incredibly well and I'm really happy with it. Some of them, like Lofty. I know lots of people that have a similar story to Josh, where they're down 50% or so, some very large amount, at least in their current token value. We've seen all kinds of bad actors on that platform doing different things. It's why, all I'm doing every day is, or what, when I'm putting out videos, it's due diligence on those properties. But I think it's very unsafe. But at the same time, whenever you have a very inefficient market, that's how you make money. Like, there's the potential to make great returns. But it's I'm certainly would never sell any of these platforms as being, where you put your money that you need tomorrow. But what do you think about that?
That's true. Yeah.
Quickly, so Dan, unfortunately, I cannot post any links on Joseph's channel. So the link to Josh's book is on my channel, but I'm not sure if anyone else in Joseph's side couldn't put the link to Joshua's book.
If you're coming from my channel, Josh, you want to put that link in our Discord?
Yeah,
Do you
I
know?
can.
We'll get that in there, because anybody who's on my channel, I always have links to the Discord I have set up. So we'll put it in there. If not right now, then after we do this. But yeah, I mean, when you're looking at the relative safety of these platforms versus other places that you invest in, you mentioned some of the REITs as well. I mean, how do you see them, comparatively?
I think they're way more efficient, because it's a diverse. That's one big flaw of the fractional real estate. You tie all your money up in one property. If something happens, it's gone. And the REITs, there's thousands of properties, and most of them. And if one thing happens, a tenant stops paying, it's completely fine. It's going to still be making about the same money. And like they, instead of distributing all the funds, there is a little bit more of I don't know, a plan with the funds to buy more properties in the REIT. So
right. Yeah, I think that's right, and it depends on, like, for me, the reason I like the fractional stuff is because I can do due diligence on the one asset I'm investing in, and then keep moving on and do that each time. Where, like, I started my career working for two different public REITs on the acquisition side, and I know we just had pressure to buy stuff, and so when you buy a REIT, you certainly can't do due diligence on their whole portfolio in any meaningful way. And so you end up, you get their average, right? You get all the dogs and all the best properties, where, the appeal to me to fractional is that we can spend the extra time, pick the ones that work for us. But like you said, you have money tied up in a single property. What do you have some thoughts on that's there's a balance there, right? The amount of time you do due diligencing the property versus, like, I want to spread my money across a lot of properties. You think there's a sweet spot as far as how many different properties you'd want to invest in?
I think the least would be 4, at least 4. It depends what kind of property, but yeah, I mean, of course, if it's like a quadruplex, 4 quadruplexes is going to be plenty. But
Yeah.
But it's also under one roof, so maybe 4 separate units. I think that's the minimum for me. It's funny because we're doing this podcast and it's about fractional real estate, but I'm really good at real estate, but I hate it. It's really a funny thing. I used to be a teacher, and I was really good at teaching, but I hated it. I burnt myself out. And I think in the beginning for real estate, I was hustling and getting all these deals done, making like 3,000% per year. And then I just got comfortable. Like I always thought, like, once I get to $1 billion, I might never stop, but then, like, I don't know. It's I have 3 kids, a wife, and I already own my house. I don't need anything else, and it's just like, why hustle so hard anymore?
It's funny. It's funny you mentioned that, because that's what I tell a lot of people too. Is I like the wealth creation side of it, but I don't love real estate. Like, there's a lot of people that can in our community, they can sit down and talk about it for hours and hours and hours, and I'm just like, I like the networking side of it and community side of it, but as far as just talking real estate, I mean, yeah, it's not for me.
Yeah, I don't relate to that at all. I'm a someone who does love it and have been, like, into it forever, but I also get what you're saying, Josh, about balance. Like, I think it's probably 5 years ago now, I decided I'm making all the money that I need to make. And so the goals, I shifted my goals at that point to every year I'm going to work less while maintaining that same level of, of returns and income versus like, when I first started, I thought I just want to build forever. But I got to a certain point where I was like, I think having a kid, obviously affected it too. He was probably 5 or 6 at the time. I want to spend more time with him. And so that's just been my goal every year. And I mean, you can, I spend almost all my time on the couch now because I've really worked my way out of having a job in my business and have other people do it. So I completely relate to that, but at the same time, I still get excited about talking about deals. It is something I think I'll do
waves. For me, it comes in waves. Tomorrow I could be extremely excited about it. It is really odd, but at the end of the day, it is 95% of my income comes from real estate. The other 5% is like from other businesses that I've invested in, or like coffee distribution, or like these various sorts of things. And it's more exciting for me. The other businesses, not like the massage therapy or anything like that, but the coffee for sure is more exciting to me than real estate.
There is some questions, I think. I'm not sure if you guys can assist with this or whatnot, but Techhead Jay says it's been hard for me to get verified for Lofty. Is that an issue you guys see quite a bit, or?
So they do have a KYC issue that a lot of people talk about. If you're outside the US, apparently it's really terrible. When you but Jerry's the founder there. He's always like, oh, there's no problem with it. So if you email Jerry at Lofty, if you run into that problem, I feel like they have a support at Lofty email, but he's always like, oh, well, you should have just emailed me. And like, he's the CEO there, but he's still like, oh, just email me if you have those problems.
I know. That was the weirdest thing, because when I first started talking to them, I said, so what's like the seed round for Lofty? What did you raise? $30 million. Like, what? And you're on the discount right now? Like, what are you doing here? Don't you have bigger fish to fry? Things like that. But the employment at Lofty is very slim. So after a while, you'll understand there's only a few people to actually answer your questions. So that's why he's so active.
I'm gonna wrap this question from Investment KD also into, there was a comment that was posted on Michael Zuber's channel when he did an interview with Joseph recently. So this one says, from Investment KD says, in REITs, not having public access to why each investment makes sense makes it a bet on the fund managers and the average property. And this comment that was left on that video that Joseph did says, I think for most beginning non-accredited investors, they are better off with a REIT than something like this, fractional real estate. Most people are not going to be able to do that kind of analysis that you went through to just briefly in this video. Most probably don't understand the risk or issues that you brought up. This is not passive, more passive than direct real estate investing, but the analysis is harder, I feel. If you're truly looking for passive real estate investing, then you should just go and buy a REIT.
Yeah, there's no such thing as passive real estate investment, but I'll answer that. So I think most users on Lofty would be better off in a REIT. The ones that don't answer any of the emails or vote in anything, they treat it like a REIT as it is. So I know what Pleb is, the Investment KD. I know what he's saying, and that's why I am the manager, because I need control. So I know exactly what he's talking about, but most people can't control their real estate. They have too much emotion. It's like a learned thing. I guess you can comment on that, Joseph.
Well, I love that you call him Pleb, because that's his screen name in the Discord. That's how everybody knows this Investment KD as Pleb. But he's someone he's making good returns, right? And So yes, the average investor probably is a lot better buying a REIT. But my goal has never been to be the average investor, right? I want to be more educated about what I'm investing in. I want to be, I've always, no matter what, even when I invested in stocks, and I spent a lot of time investing in REITs because I started my career working for REITs and felt like I had like good, not actual insider info, but good industry insider type info. But I'd still, if I invested in a REIT, I'd listen to every conference call. I'd look at everything that, if they bought a new mall or whatever, what type, I'd look at it. And yeah, if you're happy with just getting a average REIT return, or, and if you're going to do that, you're not getting a lot of the benefits that you get from investing in real estate. You don't get the tax benefits. But you don't get that in some of the fractional platforms either, right? You only get it on some of them. So I think it's absolutely right. It's certainly not for everybody. I don't think, like, if you watch many of my videos, especially more recently, I'm never telling anybody that, oh, you should just invest in lofty properties. Like, I'm like, well, there's money to be made. I still have really good returns on everything I've exited, and still doing decently well on the stuff that I haven't yet. But it takes, you just have to, it's a return on your time as much as it is anything else, because you have to dig in, you have to understand what's going on with the properties. So it's just to make the comparison, like, I don't, investing in a REIT is really not investing in real estate like that. I don't know, like, if I'm going to do that, I'm probably just going to buy a S&P 500 index fund. I'm going to buy, so like, at that point, it is, you're just betting on the management team. And so, like, why not bet on the management team of any public company, right? It doesn't necessarily. So, the reason I like real estate, and I always have in real life, real estate and now fractional, it's such an inefficient market. The people on the other side of your trades usually are making an emotional decision, like Josh started to say, not making a logical investment decision. Maybe they just need the money right away. There's all different reasons that you can get a far superior deal than what you should be if it were a market that worked the way it's supposed to. And right now, I mean, Lofty is the exemplification of an efficient market, right? Like, I mean, you get, like you said, some of your tokens are $10, and like, I've bought a lot of $8 and $10 tokens that originally traded for $50, and maybe if we sell it in real life, I'll get 30. So there's that opportunity. But yeah, it's certainly not something I would just go into lightly. Just look at the Lofty screen, buy it, trusting their numbers, and move on.
Yeah.
I didn't mean to read it. I should let you talk more, Josh.
No. I like it.
Before we get into Ali's question, I did put Joseph's recent interview or discussion on Michael Zuber's channel. So those of you in Joseph's community, if you haven't seen that or if he hasn't talked about it, he did appear on Michael Zuber's channel talking about fractional real estate. So the link is there in the chat. But this was also another comment, and you guys are both touching on it right now, but this was a comment left on that video. It says, as someone who would love to buy a rental property one day, but doesn't have a lot of capital right now, I was considering a REIT or something like this, fractional real estate. What would you recommend?
I'm going to let you take it, Josh. I'm here all the time.
A REIT? Just O. On the stock market. you can find it, just type O on the ticker, and I would just grab that one. I mean, that's just for like residential real estate, but there's plenty of REITs, like you can do industrial or commercial or things like that. But if you want I think that is the longest running REIT. Maybe I'm wrong, but
yeah, not financial advice, but just do your due diligence. But he recommends that.
Or you could go to Lofty and go to any of the properties that are under M1, and those are nice.
Let's see. Now let's get to Ali's question. He's in the school community. He just rejoined. He went on vacation to see his family, but welcome back. But he says, is Lofty similar to Parcel on Solana?
I don't know. I just looked that up, and I'm not familiar with it, so I don't know.
Okay, Ali, if you have any more information on that, maybe you can throw it in the chat so we can kind of dig into that a little bit more. Jake G says Discord doxed. Okay. Investment Katie says rest in peace. Roman Fox does say Lofty is a real estate platform first and a crypto platform second. Please don't get that confused. If you want wild speculation, go buy some cryptocurrency.
That's right. But in Garden Gate, in the there's Bitcoin in the OR, so yeah.
That's what, Mark, you might not know that it's one of the DAOs. They decided that they're going to start investing in Bitcoin within the DAO that owns the and it's driven some people crazy because it was one of the most stable assets with no debt. Like there was, if you wanted to have like the epitome of what could work on Lofty, I felt like Garden Gate was it, right? It was a nice home in a decent neighborhood that had a stable tenant forever. Had it was trading at a little bit of a discount, and then somebody jumped in there and was like, let's just start investing in Bitcoin with our reserve, which that hurt the price a little bit. And then they had this vote, okay, let's take out a mortgage against the property and invest that money in Bitcoin. That vote passed, but then they never executed on it. But so that's why that's a little bit funny, because there's a little bit of that, and for a short time people were talking about let's do this with every DAO, and that terrified me.
All right, so we got Dan tuning in from Joseph's channel. Says, I have single family rental or traditional rentals. I am new to fractional real estate investment. I am using fractional investments as diversification. I am only on Mogul at this time. Advice for a newbie in this space.
Any advice, Josh? I don't want to just talk over you if you have stuff to say.
I don't really have anything to say. I mean, if you want to try, you can try Lofty as well. I mean, on your Discord server, there's other platforms outside of Mogul and Lofty, but
right.
Yeah, I would say Lofty is the most liquid, but just be careful with it.
I guess my question to that would, so if you are a newbie, would you recommend maybe sticking to one platform at first, or kind of putting a little bit into multiple ones and see which one works best for you? What do you guys think on that?
So I know, Josh, you're just sticking to Lofty at the moment, right?
Yeah, I mean, I've dabbled like in Mogul, but I don't want to put too much in there because then I can't pull it out. Like it's stuck.
And I don't know if you know this, their plan is to have a secondary market second quarter of next year. And so far they've executed on their plans pretty well. We'll see. Obviously it's a little scary to tie up money without being sure of that.
Yeah, I've done it before. It's just, I look at it like, I don't remember what the platform was called, but it was a green application. Maybe you remember.
Was it Landa?
Landa, yeah. Oh. And it looked so good, so clean, the app. And
their app was nice.
And then like I didn't invest because their whole plan was to never sell. And it just didn't make, like, what they were investing in didn't make sense for me. Like, to never sell. It wasn't like $1 million really nice houses. It was like Midwest or Atlanta, Georgia.
Yeah, it was almost all rough properties and rough neighborhoods in Atlanta. Like that was like their We know, I know Lofty is probably getting close now, but I know a lot of people that lost a ton of money on Landa. So I actually got to fractional late enough that I put money on there and never bought a property, because as I was doing some due diligence, I got onto their Discord because they had a Discord channel.
Oh yeah.
Met a couple people who are in ours now, or on Lofty's Discord and mine as well, that already had bad experiences on there and talked me out of investing in anything. So even not having bought properties, it still took me like 6 weeks to get my cash back off of the platform. going back though to answer that question about like if you're new and you wanted to, like, I always direct really brand new people to Mogul with the understanding that at the moment you probably are investing in that until they sell in real life. They are, I just think that on average they're picking really good deals. You know, obviously you want to dig into any one that you do buy on there, because I don't buy everything that they put up. At this point, I probably bought 50% of what they put up this year, as far as just a little piece of, you know, I think I've got 16 now with them, maybe 15. You know, it's a bet on those guys executing, right? It's two people that have, you know, they're relatively young guys, but they have good experience in the space. Every time I've ever asked them questions, I've been happy with at least the thought process that got them to the answer. They don't always think of things exactly the same way as me. So that's been my go-to for like, okay, if you're brand new in the space, you don't really know a ton about real estate, it's a good place to start. But yeah, you might not have any liquidity there uh, until those properties sell in real life, other than, you know, just getting your monthly rental payments. Um, I mean, I don't know. What I did is I just took some cash and spread it out over several different platforms. But have spent a ton of, you know, I have a lot of free time, and I've spent a ton of that time looking at all of them, and, you know, hopefully to save other people some time from having to do the same thing. But there really aren't a lot of great options, you know. I mean, like, yeah, you know, I'd really, so I like the idea of Lofty so much. Like, I want them to succeed. I think their execution in so many things, you know, they were able to attract you, Josh, to the platform, someone who's doing well in real life, you know, but I think it's just an execution issue. Like, I think probably if you took over their company, or, you know, there's probably several people that could jump in there and make it work beautifully. And it just, you know, it just hasn't been, it hasn't lived up to the promise, unfortunately.
That's the first thing I told Jerry when I joined. I was going to make a platform. I had it half built, but after I visited Lofty, I thought, okay, it's done. You know, why build it again? But the fees are the problem. You know, like, I don't know if there were more transparency with fees and where the fees, like, what's the plan with the fees, and like, you have a separate spreadsheet that you have to put your fees on, you know.
Right.
So that shouldn't be happening. You know, we should know exactly how much we paid and exactly how much we're getting when we sell. But yeah, that's not the case for now.
Any chance of a hostile takeover from there?
Oh, we talk about not a hostile takeover, but maybe, like, you know, sending a few properties off platform
Yeah.
to another one. But, you know, it would take a lot of time.
Right. Right.
And
That's what,
now I'm, like, invested in Lofty too, so it doesn't really make sense to make another platform. That's full disclosure. So
oh, interesting. Is that something, uh, what made you decide to invest in them? Or do they give you equity in exchange for your services?
kind of both.
Yeah.
Yeah.
I do see. I'm not sure if you know. Go ahead. Go ahead, Josh.
But it's already told to me that it would happen, but I haven't seen it yet. So maybe it will come.
Wait, what? I missed the beginning of that. Can you say that again?
Equity exchange. It was told to me that it will happen, but it hasn't happened yet. So we'll see.
I'm not sure if you know this individual, Joseph, but they're coming over from X, Pava Lava. It says you guys should consider interviewing Dev, Matthew Shintz, or KOL Orange Louis regarding Kanye West home for sale through Solomon Slot, and talk about RWA, smart deeds, NFTs, and smart deeds.
So we have had Matt on the channel before. He's the one who Saul's Lot is his platform.
Okay.
I've also done an interview with him on my channel as well. Yeah, I think it's an interesting thing they're doing. He's partnering with another entity that I'm unaware of or wasn't aware of before, and yeah, they're gonna put it is Kanye West's former property on the blockchain. But it looks to me like it's going to be just the same sort of deal that we always see on Saul's Lot, where it's you're buying a piece of discounted equity as a part of a forward sale, which I was glad to hear, because I think it's something he's doing to attract more attention to the platform. But it always worries me that when there's sort of these gimmicky deals. So I was really glad to hear that he's really just doing his same forward sale DAC that you can invest in, make some money when it sells in the future. But it's one that's going to get, a lot of attention because of, the former owner of the property. But yeah, I was really worried that we were just moving more towards meme real estate and, collecting, just NFTs and whatnot, for the cool value. But I think there's going to be a real, investment backed reason for buying into that. But yeah, I'd love to have back on. He knows he's always invited. I don't know the other person he mentioned.
Joseph, do you see any comments that I should throw on the screen that you guys want to dig into? I don't know if it's
actually the Garden Gate Bitcoin. There's been some people like for it and against it, and I will tell you,
this one. Is that the one?
Maybe there were a few.
Okay,
but I had this proposal for my fund, my personal fund, and we came to the conclusion that it doesn't make sense to put Bitcoin in the fund. If you want, we can send out a distribution and you can buy Bitcoin if you want. But yeah, and I still think that way, even though when we did it, like we have our own like Discord channel for the fund and like Signal group and stuff. We were saying like, okay, because it was like $3,000 and now it's 112, so it was like, oh well, maybe we should have, but like the people who actually did, are the only ones benefiting. But yeah, I think you should always be able to do what you want with the funds. It's like I don't know if it's such a good idea to have Bitcoin in the ORs, but it's also not really clear like who holds the keys to that Bitcoin and what the actual wallet address is. From what I hear, I'm not in Garden Gate, but that's just what I hear.
Well, that's what surprised me about it a lot, right? Is that you have all these not your keys, not your crypto people, and then they want some entity that they own to, that is controlled by some other third party to then buy Bitcoin for them versus just getting that distribution and investing it themselves. So yeah, I think exactly like you do on that. And it's like that $3,000 that turned into 100,000 plus didn't grow any faster because it was in your fund versus out of it, right? Like
it's also like gray area for Lofty, for a property. Well, for Lofty to be holding the keys, it's almost like fund management, because just saying.
Just want to remind everyone that on my channel, there is the link to Joshua's books. If you want to go check it out, there's the Amazon link. Yeah, Joseph, I don't know. We'll wrap it up in maybe 5-10 minutes. We've been going about an hour. It's always great to have your guests on. I think fractional is definitely a growing space. I think that's why Zuber wanted you on. Like you said, it was. I wonder if we can get Real Bricks on, right? I mean, that seems to be the one that he's talking to.
Yep.
And you had some pushback, seems like, right? Not pushback, but questions for him on that platform and whatnot, right?
Yeah, and I've put out a couple videos about that platform. I've talked to their head of marketing once or twice. They actually made some adjustments on their site after my first video talking about their stuff. So I think that they have, I want to see all the fractional sites win. I think that it's something that make a lot of sense. And I think that they know that they need to change what they're doing a little bit before it's going to really appeal to people that are serious investors.
What was it called? Bricks?
Real Bricks.
Oh, I've heard of Honey Bricks. I don't know if you...
What is it?
Honey Bricks.
Oh, Honey Bricks. Yeah, I'm familiar with them as well. But Real Bricks is basically, I mean, they're doing at the moment the arrived homes model almost exactly.
Yeah.
To the point where they're using the same broker dealer and everything. Like, I mean, it is, but they have plans to do something a little bit different where you can bring all, where other people can use their platform to bring their own properties. And so that's where I think that gets interesting, right? Because a lot of people just want, because they're one that their product is a SEC registered security, right? They're going through that process versus like a tokenized property. And there's a lot of investors on the investor side that don't want to buy something that's not that, right? Because they think that that's giving them a whole bunch of extra protection. Now, whether or not it really is, I think is debatable. But so it'll be interesting to have sort of a lofty style platform where people can bring their own properties, but then they're turned into a security and sold. And then they also have talked about, maybe they're, partnering with some other platforms to then sell their security. So I think that they have some interesting ideas in the direction that they're going to go. But at the moment, I'm just not excited about the properties they have available.
And off of the fractional real estate thing, but have you ever used Rally Road? It's like fractional cars and things like that.
I'm familiar. I've never actually bought anything on there. It's fun to look, but I don't really I never got there to actually buying a piece of anything.
Yeah. I mean, they don't produce income. It's like not Warren Buffett style,
Right.
But it's more speculative, I guess, for collectibles and things like that. But I always wonder, like, because I used them before Lofty, if it helps to be on the blockchain or not. Because when I use Rally Road, it's really streamlined and really easy and intuitive for everybody. But when you get on Lofty, like we said before, it's a lot more learning curve. So
it's part of what I like about what Mogul is doing is like you don't even really notice that they're a blockchain based platform.
Yeah.
They talk about it, they, depending on the scenario, they'll talk about it. But as a user going to the site, you don't have to have any crypto knowledge, any blockchain knowledge to understand what's going on there. You can send your money to your Avalanche wallet that they have and buy that way, but it's not, I don't even know if it's actually called the Avalanche wallet, but that's the chain they're on. But you can do that, but you don't have to. And so that's, I think the biggest benefit of being on the blockchain is it makes it really, the client acquisition, that investor acquisition has been really easy. Like there's tons of people that invest on Lofty because they like Algorand.
Yep. That's true.
All right. So like I said, there is Joseph's YouTube channel in the chat. Joshua's LinkedIn profile, if you want to go follow them, know more information about them. Joseph, I know you put out daily content on your channel, and what is this 52-week challenge got going on your site?
It's kind of my version of a virtual accountability group, right? I just put out what I buy every single week, and there's a bunch of people that interact with me either in the Discord, in the comments, or through DM telling me what they're buying.
I was just reading the comment from the Jake. It's funny.
This one, the super pumped one, is that?
Yeah. Yeah. We've seen that before.
Let's see.
Yeah, what do you think about like the tokenization or fractionalization of companies? I mean, like not stock market, but like private companies, LLCs, or like startups who just use tokenization or fractional.
I mean, I don't know. Like, honestly, to me, it just seems like we're just getting a database service, right? Like, I don't, to me, it doesn't seem like we're really getting that much of a benefit other than at the moment, we maybe are avoiding a lot of regulation by doing it.
Yeah.
I just don't imagine that stays true forever, right? I think that as soon as it becomes a more regulated, controlled industry, a lot of that appeal is going to go away. It's like, okay, well, I like that it's in this public database, basically, where I can see and like the security of it. So I think there's some benefit, but I'm just not sure it's really. I think honestly, the big benefit right now is not having to register stuff with the SEC, right? And as soon as that changes, um, a lot of the sort of real world asset tokenization gets less exciting because you just get this additional layer of fees and bureaucracy and because I mean that's what's beautiful about it now, right? Like we can just trade pieces of whatever. I can move it around, so I don't need an exchange to do it, right? But it is. I don't know. I just feel like the government ruins everything, and they're just they're going to figure out how to ruin blockchain stuff too, and then it'll just be like this cool technology that's operating in the background, but it's not really as exciting as it is today.
Yeah, I think a lot of people will kind of not expose what's going on, but like the naive people who haven't run a business before will be, tokenizing it and like promising returns, which is the biggest problem, and then giving distributions, and they're not like this is technically not allowed, as far as an LLC is concerned.
Right.
But yeah, I think that's where it would run into problems. But
Yeah.
of course, if you just tokenize a company or fractionalize a company and don't promise anything, then it's fine. But it's also like anybody can buy a token of the company, like from Nigeria or North Korea, or I mean, like probably not, but like anybody in the world. That's the hard thing to track too, without having the AML KYC.
Yeah, all-nighter hider who's been dealing with the IRS on something that he's working on, but it says yes, government pollutes everything it touches. And Ray, near their studios. If you need any photography work, he's in the Washington area. Does a great job. He just was at a short-term rental Airbnb meetup in his area, but he does say yes, cash is the new floppy disk, outdated and fading fast. The real question is, when will we stop needing it altogether?
I put a Bitcoin on floppy disk before. I put it on my wall as art, just like that. I always had these like cool Bitcoin storage ideas, like on a vinyl record. Also, like in Morse code as a necklace is like lots of ideas. It's stupid, but anyways, it's not totally outdated to floppy disk. I'm just speaking up for it.
Investment KD says the last SEC admin wanted to quell all technology, cryptocurrency, and blockchain development, but that would change when more players realize big losses.
Yeah, I mean that's when all like we saw this after the 2008 crash, right? All of a sudden there was a million new regulations, both state and federal, related to anything touching real estate or financial services. That's what. Yeah, while people are making money, there's a lot less desire to get the government in there to regulate stuff. But yeah, once we see a real solid crash where there's blood in the streets, that's when you'll just have people. I mean, you see it now on Lofty, right? Like there's all these people threatening lawsuits, trying to get their state attorney general to join. It's because they're losing money right now, and so then yeah, but during good times, yeah, it's easy to just let people be creative and do whatever they want. But
So Hyder says cash is anonymous, digital is not, cash is good. I see Hugo from Stay Winning Wealth here, so go check him out on YouTube. He has a good finance, Bitcoin, crypto YouTube channel, so go check him out. But yeah, I guess we'll wrap things up. Joshua, thank you for being willing to show your face on camera. It is difficult to get people in this space to want to come on camera, but we'll wrap it up with, I guess, we were talking mainly about fractional real estate. We touched on traditional real estate, but you also mentioned a few other businesses you're in, right? I heard coffee, massage. What else? What else are you involved in, and maybe what's on the next coming across your table soon?
Yeah, the main thing is just coffee, like distribution. Have cafe. Uh, yeah, in the
Are,
U.S.,
are
Europe.
you a roaster as well, or no?
Yeah, we
Yeah.
roast coffee. Interact with the farm. Have the
Do you
store.
do you have a like actual link or brand that people can order coffee from you,
Yeah.
or you want to throw the name out, there, or
Thing is, it's mainly business to business.
oh, okay,
That's how I want to keep it.
okay,
Like, I don't want to be shipping one bag to San Francisco, and it seems to work well by just having like 10-pound minimum order. The cafes, they usually use like 50 pounds a week. So it's like, it's a good business. I don't see anybody not drinking coffee soon. I mean, yeah.
nice. Joseph, anything final words for everyone?
I don't really have anything, Josh. I appreciate you coming on. It is, it's nice to see somebody that has. I think our community, the fractional space, needs more people with actual real estate knowledge. I really appreciate you giving us your honest thoughts on Lofty, especially considering that you're an investor in their platform.
Yeah, like he said, thanks for doing this. Hopefully we can get you back on. Everyone, like I said, go check out Joseph's channel. Go check out the Amazon link for Joshua's book. Everyone have a safe and happy Halloween and have a great weekend. And we'll see you folks in a couple weeks for Fractional Friday. Thanks, everyone.